What I've always said when people have asked us about our portfolios, I've always said they are intrinsically good for the environment, socially good. Innovation tends to gain traction during tough times. Innovation solves problems. So the bond market is basically saying, no, this is a very good time for innovation. Tesla is now, within the next year, is going to spend more on electric vehicles, if it is not already, than either one of those companies. Coinbase, why did we sell some? On the day that the insider trading was announced, that's not why we sold it. Actually, it was Coinbase who surfaced or exposed what was going on there for the SEC. But the SEC did weigh in and say, we think that at least 9 of the crypto assets on Coinbase's platform are security. Well, we believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same. Now, I think the differences are, we see an inverted yield curve, and that, of course, is also a warning sign. I think our point of view is that this is going to be a severe inventory recession. Now, I think the big question is what's going on in China. I think some of the commodity price decline has to do with China unraveling in some sense from a cyclical point of view. I mean, they've got their foot on the brake in many ways. They're trying to let it off a little bit here and there. But I don't think, I think that the real estate or downturn in China is 30% of their economy, 75% of consumer savings. I think they're not going to be able to control it the way they thought they were. We think that innovation is going to be a critical allocation in the years ahead as the world moves rapidly, and it tends to innovation tends to gain traction during tough times. Innovation solves problems. We have so many problems right now. We've got the supply chain problems, which we're still hearing about. We've got energy and food prices up because of the war, really hurting consumer purchasing power. And so I think better, cheaper, faster, more productive, more efficient, more creative is going to win. That's what innovation is. So we think most asset allocators are short innovation. And I don't mean NASDAQ 100. We don't think that's truly disruptive innovation. We believe that ARK is more the old style NASDAQ than the NASDAQ is today. And as you know, we're starting to put our models out there because we think there are so many inefficiencies in research and investing when it comes to innovation. So you've got on GitHub, any of you can go check it out. We've got Tesla, Zoom, and Roku now, with others to follow during the next few months. If inflation were truly embedded in the system, 70s style, that would not, as the markets were adjusting or would be adjusting for that would not be a good time, because interest rates probably would go up a lot. In fact, one of the really reassuring developments recently has been the drop in long-term interest rates. The 10-year Treasury yield back to closing in on 275. It has not been able to maintain anything above 3% for very long at all. So the bond market is basically saying, no, this is a very good time for innovation. However, if it reversed and went the other way, that would be bad. If our outlook for deflation is correct, cyclical deflation and secular deflation. Secular deflation associated with technologically enabled innovations. That's a good deflation. That's not a bad deflation. If those two are correct, that would be the best environment, I think. Tesla, if you're analyzing cars, not by brand, although its brand certainly has done wonders in the last few years. But if you look at range and power, the combination of those, most other auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or to reach Tesla's combination. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty. But I think as consumers start to shift from gas-powered to electric and look at the specs of the different cars, they might still be persuaded by brand only, but they won't have as good an electric vehicle as Tesla will provide. And actually, we've been studying the CapEx schedules for traditional automakers versus Tesla. Tesla is now within the next year or so is going to spend more on electric vehicles, if it is not already, than either one of those companies. So here were the behemoths where, 5 years ago, when most people were saying, Tesla doesn't even have a shot to exist. It's going bankrupt. Now it is spewing out cash and spending as aggressively as it can to roll out new plans. And we think they'll announce another one before the end of the year. Coinbase, why did we sell some? On the day that the insider trading was announced, that's not why we sold it. Actually, it was Coinbase who surfaced or exposed what was going on there for the SEC. But the SEC did weigh in and say, we think that at least 9 securities, I think it was 9 of the crypto assets on Coinbase's platform are securities. So there was just a little bit more uncertainty. Okay, how many of these will they have to delist if they decide not to register with the SEC, or if they register with the SEC, how will that change their business model? So you saw that we sold very little, but we did it, we were in a day where the markets were very volatile and Shopify was down 15%. A little bit of a thesis risk increase in coin, so we swapped some. It was maybe 20 basis points, not a lot. What I've always said when people have asked us about our portfolios, I've always said they are intrinsically good for the environment, socially good, and we have a scoring system around governance. So we certainly focused on doing the right thing, which is what I think ESG is all about. I think it got way out of hand, and there was a lot of slapping lipstick on a pig, and basically any portfolio being kind of promoted as ESG. So I think the misallocation of capital was quite extreme. And I do the whole index-based phenomenon, the idea that we should look to the past to manage assets for the future just doesn't make any sense to it.